good evening. Welcome to my end of the week recap here for Apple and plan ahead for next week. Next week is earnings coming up, so be prepared for market makers to really try and trap some people on the wrong side. It's going to be a lot of betting up and down for whatever earnings comes out. There's been all kinds of news on Apple, both good and bad, so it's kind of up in the air as far as what's going to happen. Anyways, recap of my Wednesday play that I did hold overnight was the 9 February 177.5 calls here at 320. Price action opened up, looked like it was going to continue higher, but once it rolled over on a 5-minute basis, I'll show you how I knew it was time to go ahead and get out. Now, I know in my previous video I stated I wanted to stop watching the 5-minute candlesticks, but this one actually saved my butt a little bit. Here we go, I got in here at 320, and as you can see, price action came up, put in an indecision candle here on the open, topping tail, inside candle, which implies in any time frame you're looking at that there's going to be a lot of indecision at that level. So basically a break above or below a move like this is usually going to lead to at least somewhat of a temporary trend. As it turns out, this one broke down and trailed me out here. I got out some of them at 328, some of them at 309. Overall, I would consider that trade a wash, even though it was slightly profitable. Back out here to the 15-minute time frame later on in the day and Thursday, I did end up taking two more trades. So I got in some 172.5 calls here at 76 cents off of this green hammer candle, which ultimately failed, trailed me out at 68. And then, if you remember from one of my previous videos, I was illustrating how if there's a downtrend in force, at least in an overall uptrend, a series of 3 thrusts on that third touch of a profit target or a bearish support, whatever the case may be, however you want to word it. I'm looking for a break below and reclaim of that level, which is exactly what happened here. I got in some 9 February 175 calls here at 310 versus the previous low. Now, once that broke that low, it did trail me out at 280, and price action chopped quite a bit around the next day. It did open up a little bit higher, which could have led to a profit, but once a level like that is voided, I just go ahead and get out because it could still potentially break all the way down. Now, we do have a nice bullish pattern here for Friday. I did not take any trades on Friday, so I'll go ahead and go to my plan for Monday. And here we go on the 30-minute time frame. Price action is holding at what should be at least a decent intermediate trend support right here around 171, 170-ish area. I know I said in my previous video if price action broke and closed below all these levels and back inside of this flag, I would void this flag out. However, in hindsight and kind of doing a little bit more analysis of it, it looks like it still is putting in a higher low, at least relative to this point down here. So if this does hold true, we get a break above Friday's high of about 172, what's that, 172, 172 flat. We get a break above there, could confirm this as a higher low and look for a move up higher. Now, on my previous videos, I have illustrated a few support bubbles that price action has blown through. Here was one where we had just an absolute flush down low. Here was another one where price action flushed down really fast. Here was another one where price action just gapped straight down below it and hit the next support. Now, the opposite does happen as well. Whenever there is a group of moving averages, levels, whatever should be resistance above price action, market makers can do the exact same thing. So what I'm talking about is right here in this region here, there's likely to be a lot of bearish players, a lot of participants here waiting to sell because you got the 8, the 21, the 50 all right here, plus a previous trend, and it is now cracking down a little bit. So it's a little overextended. We'll see if the market makers do what they like to do and run price right straight back up through it, take out the sellers that try and short at these technical levels. Stops would be just above the 50. Another short level would be right here at the 8 and 21. Stops would be just above there. So if that does happen, expect a little bit of a pause here, break above, pause here, and a break above for a run up higher. That's just planning a little bit further out in the future. And it's a long way of saying that I'm going to stay bullish. I'm going to be looking for a move above 171.5 for an entry versus this 170 level, which is $1.50 away. So take that into consideration in any trades that you do take if you follow this plan. This is only my plan for the time being. Have my intraday notes over here. This red line is the 50 SMA. As I stated, I'll expect a little bit of a pause right here, consolidation, a little bit of a battleground. Stop losses for bears to be just above there for push up higher. Next level bears to be shorting at is right here where this cross is. Stops to be just above it. If price action does start to claim back through there, say it consolidates here, be another great opportunity to add into a move higher. If it consolidates here, another opportunity to add for another move higher. So that's my overall plan for the beginning of next week. Likely to trade options that are 2 weeks out, just so I can extend a little bit past the earnings date. We'll see what does happen. Everybody have a good weekend and good luck.